Welcome to the Franchise Masters podcast, where aspiring entrepreneurs learn what it takes to find, buy, and build successful franchise businesses. My name is Drew Carpenito, and I'm your host as we dive into these fascinating behind-the-scenes stories of people who have used surprising franchises to create massive success. I'm glad you're here. Let's dig in. All right, after a little bit on the shelf, we're bringing back a new episode of the Franchise Masters podcast. We are joined by JT Singh of FranWorth, been a multi-unit franchisee, been an investment banker, done a ton of stuff in the franchise world. JT, thanks for joining us, my friend.
Hey, Drew, thanks for having me on, man.
Yeah.
Appreciate you reaching out.
Yeah, and we've kind of gotten to know each other a little bit over the past few months, and I think that little thing called Twitter, or now called X, whatever it's called nowadays. No, man, you put some interesting thoughts out there, and I think you have a really interesting perspective to share with a lot of folks who are listening. So anyway, so JT, and man, love to kick it off. Just kind of you sharing your journey and story in franchising, and kind of how you got to the CFO of FranWorth, which has some interesting stuff going on that we'll talk about. So I'll kick it over to you, man. Would you mind sharing a little bit about your journey?
Yeah, absolutely. So, I've been in franchising probably my whole life, but I didn't really know I was in franchising until a few years ago. So, like my family, we're immigrants. I was born in India. I came here when I was a kid. And my family's always like worked in, the type of consider it the lower wage positions within franchising, and then eventually bought their own franchises. So we've been in 7-Eleven, Subways, convenience stores, pizza. Like that's the environment I grew up in. So like I remember being, 5, 6 years old and eating pepperonis every day out of the pizza shop. Like that's how I grew up. So like but I didn't, my whole life I never really considered I wasn't a franchise guy, right? So I went to school for business, became a CPA. I was doing financial due diligence for private equity firms. What that really means is like a private equity firm's writing a check for 25, 50, $100 million. They're going to hire a team of CPAs to come in and evaluate the deal, dig into the numbers, kick the tires, that type of thing. So I did that for a while. I looked at a few franchises there, still not a franchise guy. And then I transitioned over to being an investment banker where I had focused on really three industries. I was doing healthcare, franchises, and business services. Healthcare was like the home health, hospice. Uh, and then from a franchising standpoint, I was doing franchisors and large multi-unit franchisees. So, capital raise and, sell side advisory. And the large multi-unit franchisees from an investment banker standpoint, like those have to be pretty big, right? These are
How big? Like how big are you thinking?
Look, an investment banker's fee is at minimum 750 to $1 million minimum. So when you think about what type of business can afford to pay that fee, that kind of gives you the scope. So it's got to be at least a $50 million business for an owner to say, hey, yeah, you sell my business and I'll pay you $1 million, right? A typical franchise is, call it what? At most $1 million. Usually, I mean, some of them are 2-3 million bucks, but 90% of them fall under $1 million. So those, unless you're like, I'd say at least 50 units, it probably isn't even on the radar for investment bankers. So
did you get any deals done with multi-unit franchisees?
I actually, yeah. So I can't talk about them, publicly.
Oh, that's right. Yeah.
Right. But, I did capital raise for one. And then I've done a lot of work on the franchisor side, a lot of capital raising, man. A lot of these franchisors are getting going and they're like, hey, we need some money. So they'll hire an investment banker to go raise 10, 15, 20 million bucks. And, so I'd done a little bit of that. I ran a process for a few of them. And, that's really where I started becoming, really knowledgeable in franchising and seeing which franchisors, are doing well. How are they growing? What are they doing different? And then, I had always been entrepreneurial as well. So like investment banking was great. It's a high income, white collar job. You sit at a desk. But I wanted to do something else. So, somebody had reached out to me and introduced me to a guy who owned a home healthcare business, senior care. I was like, hey, JT, this guy wants to sell, not knowing what I do. Can you help him sell? I was like, sure, I'll talk to him. It was, a small franchise guy. He's been, owned and operated his business for 15 years. And I was like, this isn't what I do. Like I could give you some guidance, but this is too small for me. Why do you want to sell? And interesting story. He had a sexual misconduct charge against him, and the franchisor was almost pushing him out. And the public hadn't really became aware of an owner of a senior care business has a sexual misconduct charge against him. The public hadn't really become aware. So he's like, I need to get out as soon as possible. What can you do to help me? So I told him, it's not worth my time, but if you want to sell, here's probably what it's worth, but it's going to be tough for you to do it. How about we do this? I'll give you X amount and we can close in 30 days. And I kind of viewed that as like my out, right? I was like, look,
Yeah.
the business was sizable enough for me to, be able to continue to pay my mortgage and all of that. It, was interesting. It was close by to me. And I knew a lot about home health and hospice. I had actually sold one of the largest home health and hospice businesses locally. And I knew this area that I'm in, Metro Detroit, really, really well. And I knew a little bit about franchising. So I was like, hey, let's do it. And I convinced him to. Like, I didn't think he would actually take my offer. And he took it. Ultimately, it took us like by 90 to 100 days to get a deal done because of SBA financing. So bought that business, left my career as an investment banker. Um, and I was a full-time owner operator, man. And, I'd say the biggest learning for me the first 30 days where I went from being a guy who was, you know, driving a Tesla Model S, wearing, a nicely dry clean, perfect shirt to going and working with a team that, 80 of our employees were making less than $20 an hour and the turnover rate was 150%. So like that was my real foray into franchising. And from there, through that, moved around, ended up at FranWorth, joined FranWorth as lead guy for M&A. So I had sold my business. They had reached out to me and said, hey, you've owned a franchise, you've advised franchisors, you got a lot of experience in the space. We need somebody to come in here and really be the head of M&A for us. And about 4 months in, they said, hey, actually, we want, our CFO is retiring. You want to take over that role as well. So now I kind of take over. I took over and I lead both functions for us.
Nice. You're kind of back into you got a little bit of a foot in the investment banking ish or M&A world and what you're doing. So I got to ask you, like, what was it like? What was going through your head when you decided to make the decision from leaving investment banking on a successful track to probably go wherever you wanted to go in that world to jumping into buying an existing senior care franchise? What was it?
You know what, man? It's investment banking is a great career. You make a ton of money, but you're always going to be working for somebody else, right? That's just the reality of it. And even if you become a partner, you're servicing clients, and it's a continuous grind. And it's not a path where you ever really have an exit where you get to a point where you can manage your lifestyle. I mean, you could be a seasoned investment banker at the top firms, but you're grinding until the end, right? You're grinding for that next deal. You're grinding to get that deal done. And I just wanted to do something entrepreneurial where I could kind of control my own destiny and have a say in everything that goes on. So, interesting story. So, I always tell people, hey, don't, everybody reaches out to me, and I'm sure the same with you. It's like, hey, I want to get into franchising, but I want it to be 100% passive,
Yeah. Oh
right?
God. Yeah.
You hear it all the time, right?
Oh my God. Yeah.
And I tell people, hey, that's just not possible, man. It's not. But interesting twist in the story. I was only running my business, doing great. My firm called me back and said, hey, we want you to come back. And I said, I've got a lot of money tied up in this. I'm not walking away from this. And they're like, well, how about this? And they said, we'll give you X amount of money. That made it really compelling. I thought about it for 2 weeks, turned it down. I said, as much as I would love to, I'm not risking my business that I went all in on to, kind of do this on the side.
Yeah.
So then they came back and said, well, what would it take for you to join us? What would it take for you to come back? And I threw a number out that was just absurd, right? I said, this is the only way I can make it make sense, where even if my business takes a hit, I'll be okay. And they said, let's do it. So I said, all right, that's going to be the pay. It's going to be 100% guaranteed. Investment bankers are paid heavily bonus based at deals closing. I said, I'm not doing that. It's got to be 100% guaranteed. And it's going to be 1099 on my own terms. And I'm going to keep managing my business. And they said, let's do it.
Well
So
done.
I was doing that and I was running my business full time. I was actually sitting at my business, managing that and closing M&A deals at that same desk.
That's awesome. Well done. So like you mentioned the word grind, right? Like with investment banking, like the corporate grind is different than the small business grind in a way. But like did you notice any big differences in terms of, the grind or the work in around like what it took you to operate and grow your senior care franchise compared to the type of grind that you were doing in the investment banking world. And I'm asking you this because I think a lot of people are always thinking, like in the corporate world, thinking about making this transition. And
Right.
sometimes the type of work can be a little different than what folks may think it's like to own and operate and scale a small business and a franchise.
Yeah, I'd say for me, right, from a grind standpoint, it's less about the hours. I've always worked a lot of hours, but like more about the people that you're managing and how you manage them. So like in investment banking, I was a director at my last firm. So I had people underneath me and, VPs and associates and analysts that I'm, coaching throughout the process. But these are guys that are like, I was working with Harvard MBAs, Wharton MBAs, and guys that are like extremely, extremely driven. So like, yes, it's a grind. We're all trying to get to the same point, but it's just from a people management standpoint, totally different. And you can trust and rely on people. I jumped over to a franchise business and 95% of my employees were making less than $20 an hour. Right. And that grind is totally different. I mean, you got to be able to coach, you got to be able to retain staff. If you can retain staff and motivate them, you can do well in franchising.
Yeah.
Right?
Well,
Especially
it's
on a
like,
service-based business.
yeah, like senior care, like no question the demand is out there, right? Like, and it keeps getting bigger
Right.
and bigger and bigger, but it is an interesting labor market and reality of operating that business from the labor side of things to, because it's kind of a low wage staffing business if you kind of boil it down to kind of a fun
Exactly
like
what it is.
a comparison. But what were some of the big, like the things that you learned from owning and operating your franchise that have kind of just stuck with you that you'll never forget and will help you in life and business and the stuff that you go on to do?
You know what? This is actually a weird answer, but I was living in a bubble a little bit, and I think a lot of corporate people are, right? Whether you're a corporate accountant, you're making 75 grand, or you're an executive, you're making 500 grand. You live in a little bubble where everybody around you is just, they're also doing moderately well. If you're working at Fortune 500 or you're working at a good firm, everybody's making at least 75 grand. They're doing okay. The types of people you're around are at the top, call it 20%. When you go into franchising, you just see such a diverse population, both in terms of like clients and employees, right? Like I hadn't worked with people that were making, you know, today's minimum wage, which is $15 an hour, in probably 20 years at that point. So that was a culture shock to me, big time. Um, and that's a lot of the people in this country, right? That's a big chunk of the people. That and
Kind of small
I was
business,
dealing
right?
with,
Kind of small business in
yeah,
general, right?
and that's not something people are exposed to on a day to day. And I think that to me, that was like a reality check of like, you know, I've always managed people that were ambitious, driven, and this is a world where it's just that's not the case all the time. I mean, there certainly are people that are doing well. I don't mean to say that, but there's a lot of people out there that just don't want to work. And for me, this was post COVID. This was like actually like the tail end of COVID. So I used to joke with buddies that own restaurants, and they would always say, "Oh my God, staffing is so bad, yada yada yada. We can't get people." And I would tell them, "Look, would you rather hire somebody to come and flip a burger, or would you rather want to hire somebody to come change a diaper, right, and
Yeah.
bathe someone?" So, I don't want to hear how hard it is to get someone to flip a burger. I could find people to do that. It's hard to find somebody that wants to really, help with toileting and bathing. And the people that do are, angels. They are like literally the best humans on this earth, and I respect them. But there's not many people that want to do that.
Yeah.
So that was a huge challenge. Staffing was just a nightmare, but we managed to do it, and that's why we did well.
So what did you have to change about like your leadership and management style to adapt to the types of folks that you staffed your senior care business with?
Yeah, man. So we shifted the model quite a bit. When I came in, the owner had been running it for a long time. He's in his 50s, the manager's in her 50s, the office staff are all, elderly. And I'm a guy in my 30s coming in and being like, whoa, you guys are doing it all wrong. Right. Like the classic, you know, white collar guy in his 30s coming in. But for me, it was we stopped doing basically any discounted work. So the previous owner would see people and he'd be like, hey, you're a nice guy, I'll give you a discount. The demand was so great and we were so good at getting clients that I raised prices across the board. And I said, I know he had jobs he was doing for 25 bucks an hour. He hadn't raised their rate in 5 years. I came in and said, across the board, 32 is the new minimum. And anybody who wants to walk away can. Nobody walked away. But with being able to do that, I also raised everybody's pay. I mean, he had employees that were
Right.
making 13 bucks an hour. I was like, all right, now the new floor is going to be 15. And there's people making 17, 18, 19 I started giving raises to. So I was like, look, I don't want to deal with like the worst of the worst employees. I want to deal with, people who want to be here, who want raises. And I started guaranteeing people every 6 months you get a raise. And if you're kicking ass, you're doing a good job, I'll give you raises sooner. But I need people that want to stay. In an industry that's 150% turnover, turnover is expensive, right?
Yeah.
I would rather spend that money paying people better than, having to deal with that. So we look, our turnover still wasn't great. And but I would say we were better than our competitors, and that's what really mattered. You didn't need to be the best; you just need to be better than everybody else, who's
Yeah.
also really struggling.
It's interesting. So you were able to apply a lot of your I say finance, you say finance, but yeah, I mean, just like looking at the business and the margins and seeing the opportunity to in the market to make some pretty simple adjustments that I'm sure that had a big impact on not just being able to pay your employees better and retain them longer, but also I would imagine on the bottom line that helped elevate that bottom line pretty quickly.
Yeah, I mean, just for perspective, I mean, when I took over, we were doing 14 and a half, 15% margins. When I left, we were doing like 23, pushing 24%,
Well done.
and our
So
revenue had grown quite
50%
a bit.
increase on EBITDA, huh?
I mean, it was a lot of low hanging fruit that in my eyes, and like he was paying an SEO agency big dollars and they were doing nothing for us. So I just cut all the expenses I thought didn't make sense. And I was like, look, the key don't this is a staffing business, right? At the core, it's a simple business. You have clients that need you. They don't want you, they need you. And there's more clients that need people than there are workers. So what do? You raise the rates until you get to the point where you can, match the supply and demand, and then you start making money. And that was exactly what we did. And
Yeah.
it worked well for us.
There's a lot of wisdom in that because I think senior care is like an emotionally appealing business to a lot of prospective entrepreneurs and franchise owners. It's like, hey, you get to have an impact in the community, make a difference in people's lives, especially if you've had a parent, go through that need for needing some daily assistance from a caregiver. But you still got to run it like a business. Like you can't run it off emotion. You've got to treat it like a business. So it's like, it sounds like you came in with the business side of things, not as maybe emotionally connected to, the idea of what the business provides. And I'm probably not describing that the right way, but it's interesting. Like when you do apply business thinking to a lot of these franchise businesses and small businesses, like you look at it, you're like, wow, okay, like look, it's the same principles that apply to these businesses that basically apply to large, 10, 20, 30, 40 million dollar transactions that you're doing, right, in your
Right.
previous life. So what did you do? What happened with the senior care franchise? What happened? Did you sell it?
Yeah. So ultimately, I sold it actually earlier this year. So we had grown it. We had done well. We made some acquisitions of neighboring territories. So senior care is a territory based business, right? It's not a brick and mortar. We had an office because we needed an office for managers, schedulers, recruiters, all of that. But what's great about that business is you can essentially manage probably you could manage an entire to me, I own the entire Wayne County market. So like Metro Detroit was my area. I mean, we owned basically west of Metro Detroit, and I was like, well, all of our staff are coming from Detroit, like literally in the middle of Detroit, and they're driving 30 minutes west. That means they can drive 30 minutes south as well, right? They can drive 30 minutes north as well. So, I'd reached out to one of my neighboring franchisees who's like, hey, I have this territory. I can't staff it. I'm like, I can staff that territory like now. And I was getting so many leads. One thing that I did, so I optimized our website for SEO. I fired the company. I just started doing it myself. And because of that, one of the things I did was I added uh, meta titles and landing pages for every individual city that we serviced. So we started getting leads from outside of my territory. And as those were coming in, I'd call the neighboring franchisee because I don't want to get into trouble for crossing the lines. Like, hey, I got this lead for you. He's like, all right, let me see if I can service it, and whatever. Never heard about it again. 3 leads in, he's like, I can't even service these. I was like, well, let me take it then. He's like, yeah, but that's my territory, so give me a cut. And I'm like, I'm not giving you a cut. If you want to sell your territory, I'll take it. And I got three 24/7 cases in the same weekend in his territory. And for senior care, a 24/7 case is a lot of hours, right? I mean, that's, I think it was $10,700 of billings every 2 weeks for one
Whoa.
case, right? So call it 60 grand right there. I'm handing over to somebody for a month, right? $60,000 a month of revenue that he couldn't service. So I said, look, you need to sell me your territory right now. So, we had made an arrangement. I was going to pay it off over X amount of time. We worked it out. I took over that territory and immediately I was able to get clients from there and start staffing.
Nice.
So to me, I paid off that territory in the first 6 months, what it cost me.
I bet.
And, the business was just doing really well. And as I was originally, I was poking around different opportunities when I wanted to leave my investment banking career. I was talking to a broker, somewhat similar to yourself. He was more a business broker, not a franchise broker. But he was like, "Hey, I have a lot of buyers that would like your business. Would you be interested in selling?" I'm the type of guy where anything's for sale. If you knock on my door today and you offer me twice what my house is worth, I'll sell it to you. Right.
Yeah.
And I was like, "Hey, I would, but here's a number that, again, doesn't make sense. Nobody should pay this for this business. But if somebody wants to, I'm open to it." He's like, "All right, well, let me see what I can do." And brokers take 10%. And I was like, "And I'm not paying you 10% because this
Oh,
thing
you're
is
killing the
this
brokers,
thing."
JT. What are you doing? No, I'm just kidding. I
I say,
get
"I'm not paying you 10%. I got
it.
this thing buttoned up. I'm an investment banker. I can make a deck for you, and I could sell this business myself if I wanted to." I mean, at this point,
Yeah.
Drew, I mean, we were cash flowing nicely every month, and I was able to have a separate business. So I could position this as semi-absentee, right?
Yep.
And we had just done so much to make the business in a really good shape. It was a well-oiled machine. So if I'm going to sell it, it's going to be a pretty penny. And he brought me a buyer. And this is another thing that investment bankers and brokers will say, like, never happens. But I was like, okay, if this person is serious, I want a $25,000 non-refundable deposit just for me to, like, move forward to this process, because I'm not going through this for you to say, you know what, I can't afford it, or this or that, or SBA financing doesn't come through and the valuation doesn't work. They paid it. So I was like, all right, in this case, let's see it. To the end,
Nice.
to the last day, I thought there's no way this closes. And then the deal closed. So
That's awesome. Who was the what was the profile of the buyer? Was it
it
a
was, so,
like individual or was it a group?
yeah, it was an individual, a couple actually, that really wanted to get into the space. They wanted a sizable enough business that they could, step into, that was, semi-absentee, management teams in place, all that type of thing. Look, I'm an investment banker. I know all I've done is position businesses for sale. So, like,
Yeah.
when I manage my own business, I position it for sale. This checked all the boxes, and they were really interested, and it worked out for them. And actually, I have a good relationship with them today. The business is continuing to do very, very well. So I'm very
That's
happy
awesome.
about that.
Yeah, it sounds like, I mean, you built it to sell, which increases the value of any business, any franchise, right? If it's
Right.
transferable. And it sounds like you had a good team and had done some smart things with just the growth from acquiring your neighboring franchisees in the territories, and especially on the marketing side, got really creative. But I mean, like, what you did, like, I mean, yes, it was creative, but it's not like it was like, one of a kind creative kind of stuff. Like, it was,
Right. Low hanging fruit, like very low hanging fruit. I tweet about this stuff all the time. I'm like, if you can probably apply what I did to at least 50% of the franchises out there, right?
yeah, because your competition wasn't doing a lot of that stuff. I'm sure, right?
No, I mean, my competition was 65-year-old ladies, right? Like, that are
Yeah,
in the business because they're passionate about it. Now, don't get me wrong. I was passionate about the business. I was passionate about taking care of people. One of the reasons I got into it is my wife and I were caregivers for my father-in-law who had muscular dystrophy. Like, we've been there, but, like, that story in and of itself also helps sell, right? Everything is sales in a franchise business. We had our story on the website. People would call us and literally say, "I looked at all the competitors. We read your story. We liked that. That resonated with us. We want to go with you because we know that you're going to take care of us." And on top of that, I say, look, and I pay my people better than every other competitor out there right now. Right? You mix the two, and it's just a winning strategy. I mean, we had people that had gone through 4 agencies before coming to us, and they stayed with us for over a year.
wow, yeah,
So
able to pay them better, have a better culture, treat them right, give them more predictable, work, I would imagine, as well.
right, right.
um okay, so, like, you did something very smart. and you kind of probably had a leg up because you came from the M&A world a little bit, did you have a relationship with that business broker prior, or was it like an out of the blue call that you got from this person that was like, hey, in case you're ever interested in selling, let me know, I've got
The
somebody.
only relationship I had with him is I had spoken with him about a business he was representing,
Okay.
about potentially buying a business he was representing. Beyond that, I didn't know anything about him. I
And
knew
then
his
he
name
called
and I
you out
knew.
of the blue when he had the clients that were interested in getting into the
I,
senior care
so I,
space.
I kept in touch with him because I'm always looking at business to buy. Even now, like I ask you every time we talk, like, hey, what are you seeing? What's out there? I'm always looking at stuff. So like I keep a good Rolodex of brokers that I want to keep in touch with in case something does come up.
Yeah.
Yeah. So because of that, we had kept in touch. But I mean, it wasn't to this day. I've never met him face to face.
But so where I was kind of going with that, do you think so for franchisees who are crushing it, multi-unit, even single territory operators that are building a really good business, it's profitable, it's cash flowing, the books are clean, they're updated, they're not running their business by their bank account kind of thing. Do you think it's smart for those franchise owners to always kind of identify who some of the better business brokers are in the market and just, take them out for coffee once or twice a year just to develop a relationship with the idea that maybe the same thing happens in terms of those brokers get a buyer that just wants their type of business, and they can ask for, kind of throw out some pretty aggressive terms, and if they get it, great. If they don't.
Hey, that's my approach. I mean,
Yeah.
you don't have to. And it's tough as you scale. It becomes harder and harder to sell, right? If you're making 150 grand and you run a little pizza shop, there's a lot of buyers out there for that type of thing. Then almost anybody can afford that. As you move upstream, it gets harder and harder to sell. And as eventually you get to a point, I wasn't at this point, but that really only like sophisticated either private equity that wants to do a roll up wants to get into it, or somebody who's really really well capitalized that really wants to get into it, which are those are rare and far in between. So I think if you're depending on the size that you are, impacts a strategy that you should take. But hey, it always makes sense. If there's active brokers that are doing a lot of deals in your space, you should always keep in touch with them.
Yeah. 100%. All right. So you brought up and that's an amazing story. Congratulations on building it up and being able to have a nice successful exit. You mentioned like you get a lot of people reaching out to you about, hey, I want to buy a franchise, but I don't want to operate it. I'm looking for some passive income. Like, why do you think people think that franchises are passive income sources?
Part of it, I blame you guys, man, the brokers.
I knew you were going to say that. I knew it.
You're one of the very good brokers, Drew. And I send leads your way because of that. But there's a lot of people out there that are just, telling people, hey, franchising is an asset class, no different than stocks, and you should be investing in it. That's just
Yeah.
not true, right? It's so false. Like anybody who's ever owned a franchise, you it can become passive, and I tell
Yeah.
people that it can very easily become passive, but you need to at least get in there and be an owner operator for at minimum 6 months. I mean, I know guys that have done it shorter, but if you're not a sophisticated operator and you're a corporate marketing or you're a teacher or an engineer and you're getting into this, I would plan at least a year of running it yourself before best case scenario, you could kind of step back. Or if you want to get into multi-unit, essentially a multi-unit franchisee is passive. I mean, you know what I mean? You're
But
not
you got to
passive in
build
the
it. You
sense
got
of
to build it to, like,
you got to
you
build
got
it.
to get it to that point.
Yeah, I mean, if you own five, you're not going into any one of them and being full time. You have to passively manage each one. But it's by passive. Passive doesn't mean zero to me, at least, right? Passive means 10 hours a week at 10 hours per location. And once you get to a certain point, you can get regional managers, and there's guys on Twitter who have 30, 40 units. You have levels of hierarchy, and it becomes more and more passive, but that takes a long time to build up to, and people really miss that.
A hundred
Right?
percent.
Don't get into one thinking, hey, I want to put 100 grand to work and I want to get 30% returns. You're not getting that.
People come to me and I always say, I'm like, look, it's possible to build a franchise into, quote unquote passive, whatever passive means. And passive means something different to everybody. Cause I always ask them, I'm like, what does passive mean to you first?
Right.
But you got to operate this thing. Like it is a it is a machine. It is a living, breathing thing that needs, especially from the ground up perspective, or even if you buy an existing one, like, I mean, the learning curve that you probably went through, I mean, you talked a little bit about it, just getting adjusted, getting your sea legs, getting used to operating the business. Like it is, that is a very, very real thing. And if you don't plan to get gritty and grind and pay close attention to the business, like it's just, it's not going to end well. And it might be a nice
Yeah.
tax write-off if you have a lot of money, but like it's just not going to be anywhere near what you, the success that you're looking for, as you know, an investor. And I don't even like using the word investor in franchising, because you're an operator. You got to operate this thing and
You
maybe
know,
convert it into an invested. Then you can transition into more of an investor down the road.
for sure. I love people that say, no, we're looking for something that's a manage the manager model. And I'm like, look, let's just say that there is a manage the manager model because technically there are, right? And let's say you own three of them, right? And they're doing well. The three managers are doing great. What happens when that manager quits? What happens when that manager gets sick and you've never been in the business? Like a passive business, if you're under three units, and you don't have a regional in place, is one manager away from you becoming a full-time job. And that's what people just totally miss on. And I tell everybody that, it's go into it eyes wide open with those expectations. And best case scenario, you have a rock star manager that can run 100% of the business, but that's probably not going to happen, at least not initially.
Yeah, and it's like, okay, so like we're kind of like getting real here. It's like, so why would anybody sign up for this, right? Because the opportunity is there to build a significant business that can be greater, than whatever somebody's making in the corporate world or whatever, right? Like the opportunity to build a lot of cash flow out of a business is there with certain franchises. It's just, it's a different form of investing and living and operating than real estate, than stock market investing, than iBanking, whatever it may be, right? Like it's its own animal in a lot of ways. But it can be, I mean, some of the stories, I'm sure you've seen it, people that have gotten into certain franchises, a lot of times are like these quirky looking franchises from the outside looking in, and you're like, holy moly, like these guys have built some massive businesses, and they're low key because they don't need to be the face of the business, right? Because like they've built it to where they don't need to be the face of the business. And it's always interesting whenever you run across those super successful multi-unit franchisees, and you're like, damn, man, well done.
Yeah, I talked to a lot of them, man, and it's impressive. What people can build through franchising is very, very impressive, and a lot of people don't even know about it. Early in my career, I had no idea you could make millions of dollars in franchising. And if you think about it purely from a investment standpoint, with the SBA loans, like the SBA is like the greatest gift to entrepreneurs that there could be, right? For just using math, it's like if you're buying a business for that makes 150, it's a resale for 500 grand, you only need to come out of pocket like 50 to 75 grand, right? 75 grand, you're out of pocket, it's making 150 after debt service, you're cash flow positive, and you can continue to just, roll that up and grow. If there's white space, it's a home run. Like that's what people need to be thinking about.
Yeah, and it's like smart debt. Like it's, it for the right business, it's good debt to leverage to preserve liquidity, keep more of your personal liquidity in the bank and have access to more working capital than you may need, and all kinds of stuff. Even at, 10, 11% interest rates, which suck, but that's just what it is. I mean, the math still works on a lot of these businesses. So what do you say? Like, I get a lot of folks, I'm sure you do too, though, I kind of call them the roll up bros, but these folks that are like, look, Drew, JT, I want to get in, I want to buy an existing business just like you did. I want to buy an existing franchise and then I want to grow through acquisition. That's my strategy. And I'm always like, dude, finding a good franchise resale is hard. Like you can go on Biz Buy Sell and it's a cesspool. Like you don't know what the heck you're going to find on there. Half those listings aren't even accurate. They're not even real listings, but like, and I always kind of talk to people like, look, you got to get in the game of these certain franchise systems that have shown that they are growing at a rapid rate. They have successful multi-unit franchisees, but like the territory in your area is gone. Like maybe you go to a different market, get in the game, you can go through acquisition that way. That's kind of what I coach people to think about But what advice do you have for some of these roll up bros that are, looking at, they're trying to ultimately build a massive portfolio of franchises, but how they start, I think people have different opinions and different approaches to it. So what advice do you have for folks like that?
Legacy franchises are tough to get into, no doubt, right? Like there's a lot of them. There's guys on Twitter who've done it with Midas and Wingstop and other brands. Like Wingstop is a home run business. If you get into it, great, but good luck, right? No one's selling it. And if they are selling it, those are internal sales. So the only real opportunity that I see, or the more tangible, realistic one, is emerging brands. Emerging brands, you can get in. There's going to be territory. There's going to be white space. It's going to be cheaper to get into in terms of, you're not paying a premium on a resale. So I always tell people, 90% of emerging brands, that might be an exaggeration, maybe 75%, are not going to make it.
Right.
Right? They're not going to do well. And they might. I think the actual stats like 86% never make it to 100 units. You don't want to get into those brands. You want to get into brands that are going to be the next Jersey Mike's, right? The next whatever, like the next Crumble cookies. Crumble and Orange Theory kind of like
Yeah.
everybody looks at those and like
Yeah.
that's what I want.
There's like,
Good luck.
that's a unicorn hunting
Those
there.
are unicorns, right?
Yeah.
Right. But if you can get a business that's a 3.5 year payback, it is high potential for growth. They're selling a lot of units. They're not just blowing smoke. They have good corporate infrastructure to support new franchisees, and the white space is there. There's a ton of opportunity in, right? Like I know I look at these for myself all the time. I mean, look, I have a full-time job, but I still, I'm a franchisee of multiple brands. I'm an investor in three IHOPs. Like I'm always looking at new opportunities, and emerging brands are really where there's a lot of value and potential compared to, beating your head trying to find some franchisee who's going to sell, a legacy brand like Wingstop or whatever, right? You're not going to find a McDonald's franchisee that ever wants to sell.
No, because you nailed it. Like they're not going to make it to the open market. They're going to get gobbled up by other franchisees before anybody has a chance to even get a whiff at it. So
Right.
You have an interesting perspective because like you're in the game as an entrepreneur. You're also in a seat at FranWorth where you are doing M&A, right? Like you're overseeing a lot of the brands. You're kind of helping to select which brands you get involved with. So like if you could like chunk it down in terms of like indicators, because there's never like you're never going to know candidly. Like you gotta size these businesses up by looking at it through certain angles and certain indicators in terms of like these emerging brands. Like what are some of the things that you look for? And maybe it's different personally, or maybe it's the same in terms of like when you have your corporate hat on, but like what are some of the things that stand out to you that people should look for in terms of, okay, hey, this emerging brand has potential. Like this could be one worth me getting involved with and opening multiple locations with.
Yeah, so from a FranWorth standpoint, it's a little different. So I'll start with that. For FranWorth standpoint, I talked to probably 3 to 5, early stage franchise brands or businesses that want a franchise. I actually had calls with two of them today. The three criteria, this is like the baseline introductory call. Does this make sense to dig into? One, the unit level economics have to make sense, right? If your financials aren't good, stay away from them.
Yeah.
And personally, I have a rule that if you're an emerging brand and you're not disclosing an item 19, even if supposedly it's amazing, like they say, it's not worth my time.
Yeah.
Right. On the FranWorth side, I'm not a prospective franchisee. They have to they disclose their financials to fully, right? So I get a little behind the scenes look on a lot of different brands. And so unit economics is number one thing. Two is we need a really good founder and leadership team involved with the business, right? If you have a business that you're not really that involved with, it does okay, and you're like, hey, can you franchise this for me? Because that's my only way to grow this thing. We're not interested. And then the third we really look at is like the white space. What's the potential? What's the end markets looking like? So if you have really good unit economics, multi-location, ideally, really good leadership team, and the end markets are really, really strong, that's a brand we want to get in with. So I've personally been looking for FranWorth in the pet space. I love the pet space. I've talked about it on social media. Home services, I think, is a home run too. I mean, home services right now, the demand's there. It's a lower investment, and you can do really, really well. And then I've done a lot in the health and wellness space as well. So there's a few other industries that we poke around in, but those are the really three that we look for right now in the franchisor. And FranWorth is pretty deep into the beauty and wellness space, so we do that as well. But personally, for me, it's you know, who's the leadership team? Do I like them or not? Right? Like I was this close to signing a franchise agreement with an emerging brand that I liked a lot, but I just could not get over my interaction with the CEO. I thought he was kind of a prick, so I was like, you know what? I don't want to be affiliated with this guy.
Yeah.
Walked away from that one. But if a good leadership team, good unit level economics, and good potential for growth, like how many units are they selling? And that's really what gauges my interest. And do I like the product? I'm less of a, I don't pursue businesses as passions. I pursue them to make money. So
Yeah.
I'm less about the passion, but if it is there, it's great. Right.
Yeah. So you're agnostic to a certain degree.
Yeah.
Yeah.
Like I don't come to work because I love to work. I come to work to make money. And the same thing with business, right? And to me, it's dollars and cents are, 90% of it.
Yeah. Yeah, it's interesting. So you said the unit economics, the founder, the leadership team, the white space, in terms of just like the niche that they're in and what the competition. So how do you assess white space? Like what are some of the things you look for when you're sizing up, a certain niche of a company that's come
So
across
I'll,
your
I'll tell
desk?
you, I'll give you examples of brands we've turned down. And some, one, they had 30 locations. So they checked that multi-location spot and they're all performing pretty well. Founders were great. It was in a tanning salon business. So think about that. The end markets for tanning in the industry, that's not a business you want to be in, right?
Why not?
And more and more stuff that's coming out about the health effects, yada yada yada. That's not interesting at all. Turn that down.
That was like 10 years ago. That might have been an interesting business to get into, right?
Like
Before.
15 years ago,
Yeah.
right? Maybe even 20 years ago, that would have been good. But the last 10 years, it's just been going down. It's and we tried to convince the founders. I try to convince them. I tell people, look, you shouldn't franchise. Don't do it. It's expensive. It's a lot of headaches. It's not going to be worth your time. I don't know if they listen to me or not, but whatever. A brand I like a lot, Pet Space, 7 locations, all crushing it. Great leadership team, and I think the stat was there's 9 million more dogs in the US today than there were pre-COVID. So when you talk about potential, and I don't know about you, in my market, you go to any, dog boarding, dog daycare, and you ask them if, are you guys busy? They're like, we're at capacity
Yeah.
across the country. So that's a business you want to be in, right? I know for a fact I can open one of these and I could probably open 30 of these in every state and crush it. So like that's really the end market that I try to look for. And what's the competitive landscape? Like, is there 20 other competitors that are just crushing it out there and you're going to be the 21st? That's probably not a space you want to be in. Or is there like one or two that are really leading, but they have fatal flaws in their business and there's opportunity for a new player to come into the space? So like that's kind of what we think through. Does that help?
Yeah, yeah, yeah. No, it's very insightful. And that applies to like, and that's where like having an open mind is so important, like you do naturally, but like for a lot of first time entrepreneurs, franchise owners, whatever it may be, like to get to that mindset of like having an open mind around businesses that operate in certain niches that you might not have any direct industry experience with, or you're going to have some assumptions about it based on just probably life and personal interactions with that type of business. But like to flip your mindset to look at it as an entrepreneur, it's like, okay, now that I'm thinking about it as an entrepreneur, I can start to see some of these angles. And then like what systems and what's the business model that the franchise companies put together, because then you're going to get you're going to see a lot of franchises in the space, like the 86% of the emerging brands that you mentioned that never get to 100 units because they don't have a very sophisticated business model. Like it might just be
Right.
straight up owner operator, like, hey, owner, you're going to be in the shop grooming dogs, that's our business model. Like that's not necessarily the model you want to get involved with, right? You want these companies that have put together the right infrastructure, the right systems, the right playbook for not just a single unit, to where you can get that thing going to the point where probably you have a manager in place and whatnot, and then replicate it, because the first one's always the hardest, right? Like first one you learn a lot, but once you get the first one open, then you have some resources that you could leverage for another location, and that second one you're going to be wiser, you're going to be smarter. It's not going to be as hard. It's still going to be a lot of work, but not as difficult. And you kind of rinse and repeat it from there. So Yeah, it's
Yeah,
interesting to as we talk about all this stuff like theoretically, right? But then it's like then there's always like the decision too. Like did you like when you made the big transition in your career from leaving the iBanking to getting into the senior care space, like did you have like any massive sleepless nights where you just like, what the hell am I doing? Is this the right thing for me and the family?
you know what? We lost um I 25% of the revenue a week before closing. They had two really large facility contracts. So these are, they were providing staffing for two facilities in my market. Those ended literally, I think it was like 9 or 10 days before. And
Wow.
the seller told me like 3 days before, and he was like, he could have closed and lied to me, and I would have sued him. But he's like, hey, I know this was going to happen, and I have to be transparent. Yeah, he's a nice guy. Thankfully, I still keep in touch with him. But that to me, like, makes you realize, like, shoot, yeah, there's a lot of different clients. You look at like the roster and this and that. You're like, oh yeah, there's no customer concentration, but like there is concentration in that sense. If they're all within this, one community, and that community walks away. So for me, I was at the point where I was just like, I need to do something. And I hate the term retrade. In investment banking, it's like a sin to say that word to retrade a deal, but we had to retrade the deal and we still got it done. But
Which means
I'd
you
say
had
the
to
first,
renegotiate the terms, right?
yeah,
Yeah.
he still got paid. We just structured it where he got paid a little later, depending on a few things. But um, yeah, I mean, the first month was tough for sure. I mean, probably the first 3 months, I was like, shoot, did I make a good decision? I had
Yeah.
zero
Yeah.
risk. I had zero risk. I was
Yeah.
making really good money, and I think my son was like 6 months old at the time, so I basically had a newborn at home, and my wife trusts me with this, and I was like, shoot, I hope I made the right decision. And it was probably months 4 or 5 when things really started taking off that I was like, all right, this is getting good. By months 6 through 8, we started making a lot of money. And then I was like, all right, now I'm good.
Yeah.
So I'd say it takes 6 months to really get to that point.
Yeah, no doubt. Like, and it's like important to kind of go into that, like with that mindset. Like, it's delayed gratification. Like, this is not.
Right.
You got to find gratification from the small stuff, from the small wins, right? Like, finding a good employee that you think is going to stick around, or figuring out a new marketing strategy that's starting to generate some activity. Like the small wins are that's where you get the gratification from when you're in the
Right.
build phase of this thing. It's not the money because
Right.
it's
It,
the
I
money
think with
comes later.
franchising, yeah, I mean, I think with franchising, like from a sales standpoint, there's a lot of value to being an owner operator. Like people want to see an owner involved, right? If you go to a restaurant and the owner's walking around and like checking in on you, how good does that make you feel, right? Like my favorite restaurant here in town here, it's like I know the owner. Like I go back there because I'm like the owner's not there every time, but when he is there, it makes you feel like, oh, I know the guy. It's a local place, that type of thing. And in franchising, you're a small business in a local community, and being out there and having your name out there and all that just adds so much value. So in that sense, it's another reason why passive doesn't really work out great for most people. But again, it just depends on if you're a QSR and you're at McDonald's or a big brand, less relevant. But if you're an emerging brand that's really getting off the ground and trying to make it, having your face and your name associated with the business as the owner, I think is very valuable.
Yeah, not just from the customer's perspective, but from the just showing it to your employees too, right? Like you're
Right.
there, you're present, you're involved, you're in the game. You're not just sitting in the back, or not even there, right? And
Right.
just from a cultural standpoint, I'm sure it has a big impact on.
The little things are what
Yeah,
people care about, right? They want to see that somebody actually cares about them. And it's like, it's not this mysterious, you're working for the man. It's like the man is like a guy you like and and you trust, and he takes care of you and he buys you lunch. And, if your car breaks down, he's there for you. And like, in the senior care space, a lot of our employees were having car issues, right? And I would send somebody to pick them up. I'd send them an Uber. I wouldn't charge them for it. I picked up employees myself, like employees I picked up myself. If this was a KPI we tracked, stayed with us probably 3 times as long as employees I've never picked up. Because that car ride, you build the relationship with them, right? That 20-minute car ride, there's not many times besides like the interview and you know Christmas party, whatever, that they really get 20 minutes or 30 minutes sitting down with the owner one on one. But in a car ride, you do, and like those moments, over time add value, and that employee goes and tells other employees how great you are, and that type of thing. That's how you drive a culture.
That's like one of the like if I've worked with a lot of folks over the years who've gotten in all different types of franchises. And like, if I had to boil it down to like the folks that I've seen that have gone on to have the most success with franchises, like they just do the people piece amazing. Like
Yeah.
it's a superpower. And it's not a superpower like you're born with, like you can learn it, but like they have this ability to just connect with their employees and make their employees feel like they're a part of something. There's a
Right.
bigger purpose to what they're doing. It's not just a paycheck. They do the little things that employees maybe might not expect, like going to pick them up, or taking a late night phone call if they're going through something personal and just listening to them, that kind of stuff. Like the people
Right.
piece of a small business and a franchise is like, if you can do that piece really, really well, like obviously it's an integral part to scaling, but like that's where the magic can start to happen, because people want to work for you. People will go
Right.
out of their way to do stuff that maybe is not in their job description or whatever it may be, but they want to make you happy, they want to impress you, they want the company to succeed, all that kind of stuff. But the people skills is something that I've seen the folks do really, really well with, that have had the most success.
If you're exceptional at that, that makes up for a lot of flaws, right? You can be exceptional at that and be horrible at everything else, and you'll probably still do okay, right? Like you
Yeah.
don't need to know finance and accounting and all that type of stuff, but if you can hire great people and they like you and they stay with you and all of that, you can hire people to do the things that you need them to do. Everything else will work itself out. That and probably sales. I'd say that and sales are probably the two most important thing. Everything else you can figure out.
Yeah, no, I agree with you 100%. And like as first time owners, like if you feel like you have those scales, it's great. Your life becomes a lot easier if you get in with the right franchise, compared to like, you'll be like, those people will be successful no matter what franchise they get into, right?
Right.
But
Right.
your life becomes a lot easier if you get into a quality one versus that 86%, and that aren't isn't going to really go anywhere. So
Let me
so
ask
yeah,
you
man.
your opinion. Let me ask you your opinion on this. How much of it is a franchise and how much of it is the owner?
Oh.
Like,
So I think it's a third, a third, a third. I think a third of it's the business model. Like
yep,
the business model has to have been proven, it can replicate to other markets, that kind of thing. So, there's the business model. I think a third of it is the franchise company, in terms of just like the support, the culture, the training and whatnot that they provide to their franchisees. And then the last third is it's the franchise owner themselves. So that's
yeah,
my, like, I just keep it simple, like a third, a third, a third, just to kind of
right.
keep it simple in my head. But that's how I look at it. How do you look at it?
Probably similar. I was kind of view it as like 50-50, but I think you group two of them together. So it's like, 67-33. But for me, it's like you're a really good operator and you have a B quality franchise, you'll be fine, right? If you're a poor operator and you have A quality franchise, you're probably also not poor, but if you're like a C quality operator, you have an A quality franchise, you'll be fine. What you don't want to be is a C quality operator and a C quality franchise.
No.
That's where it's challenged.
Yeah.
Right?
100%. Yeah.
So I view it as 50-50. I mean, there's guys out there that I know that you could plug and play into almost any franchise system and they'll crush it.
They'll
Right.
figure it out. Yeah.
But and from a FranWorth standpoint, when we're looking at brands, to us, it's also like I don't want to be the franchisor of a brand that requires, that A plus guy to do well. Right. We want a franchise brand that B minus C plus caliber franchisee is still going to crush it. Right. So me and you have talked about other brands that are like, hey, they're doing so well with the good franchise owners. But what about everybody else who's not quite as sophisticated because the business model is so complex? Right. That's not really something you want to get into. Where if it's that complex, that's a tough business to run. You want to get into a franchise, in my eyes, is supposed to be a business in a box that's simple enough for somebody who's an average IQ, hardworking person to do well in, right? That's a good franchise system.
I agree with you. The simpler, the better, for sure. The more
Right.
complicated some of these businesses get, especially like into the medical space and stuff like that, like I get a little nervous. But yeah, there's so many angles that to look at. But I think it does start like looking in the mirror, at yourself, if you're thinking about getting into franchising, in terms of like why, like what is it that's driving you to get into a franchise? Like are you willing to do, make changes in your life and work differently, and have something greater that you're trying to achieve, that you can't get, doing work, following the corporate world or whatever it may be. Um, But
Yeah,
you know,
uncapped
as you,
upside, man. Right?
yeah,
That's what gets
no,
people going.
no doubt. And then the exit. I mean, there's a massive opportunity to create wealth as a franchisee, not just in the short term from the cash flow of the business, but also long term if you ever go to cash out and sell it. Like
Right.
there's a very real market for folks that, you know, like the roll up bros that just want to buy existing franchisees and scale from there. So cool. All right. Well, we'll wrap it up, man. Anything like in terms of like any other thoughts that have just been kind of going through your head that you think would be good to kind of leave the audience with?
Nothing off the top of my head. I'd say if you're a prospective franchisee, make sure that you do your diligence. You use guys like Drew to make the introductions, but don't rely on guys like Drew to, pick the right brands for you, right? Hire the right advisors, hire a CPA if you're not good at it. Definitely hire an attorney to review the FDD. Me and you could probably go into an FDD podcast just on that, on things to watch out for and the risks there. So, go into it eyes wide open and, work hard and things will work out.
I love it. I love it, man. JT, thanks for the time, brother. Enjoy the conversation.
Yeah, likewise, Drew. Thanks for having me.
See you, man. That's a wrap. Hope you found a nugget or two in there that can help you on your franchise journey. And if you ever want to talk franchising, reach out to me anytime.